Hi guys, hope you guys are well. Hope you guys are ready for this week's worth of trading. And with that being said, in today's video, what we'll be doing is a weekly outlook or breakdown, right? And essentially, we're doing this in order to understand what to anticipate in this week's worth of trading. So I will be going through the dollar and GBPUSD, but concerning the dollar, I will be doing a very in-depth analysis with you guys on the dollar because of course there's some of you guys who trade pairs that are associated with the dollar who don't necessarily trade GBPUSD, but you trade other pairs that are associated with it. You can use this information, further investigate it, and immediately you can have a certain idea to look forward to in whatever pair, may it be USD JPY or whatever pair that is associated with the dollar, right? Hope you understand what I'm trying to say based on that. But with that being said, let's start with DXY, right? So we'll be starting on a higher time frame, our highest time frame being the monthly, then we'll go on to the weekly and then the daily. These time frames are my favorite due to the fact that I know that my invested interest is in having to understand what the big corporations are trying to do, being the hedge funds, the corporations with large amounts of money, right? And they are making their investments on, these time frames, right? So I'm trying to see what their objectives are. And we know that essentially the market is run by big money. So those are the ones who are sponsoring liquidity within the market. So I want to understand where their objectives are. So immediately I see that, I want to be trading towards that direction, right? And that's how you avoid becoming liquidity, right? You avoid taking L's all the time. You want to trade with the market and not against it. So on a monthly time frame, we can see if we just zoom out, there was a time where we're pushing higher and we took these monthly buy stops over here, which is regarded as external range liquidity. We've already discussed in our previous videos that, the market moves from external range liquidity and then you want to see the market go into internal range liquidity, be it a fair value gap, order block, all of those sorts of things. So from external range liquidity, we formulate a high, right? Intermediate term high on a monthly time frame. We draw all the way down into a monthly fair value gap, right? And immediately we start to see the market continue higher, giving us market structure shifts, indicating that there's a likelihood that this low may have been set and we want to see the market continue higher, right? But before we got the reversal, we see that we've accumulated a bit here and then the market went lower as to take these sell stops. So immediately we understand that at this point, smart money was order pairing against these sell stops. To order pair is essentially just to buy against these sell stops, right? So they buy against the sell stops, they push the market higher and they reach into buy stops over here, which is external range liquidity. After that, you want to see the market draw towards internal range liquidity. So we filled the fair value gap, but most importantly, we draw all the way down into discount of this entire leg, right? And we see the market draw into a rejection block, right? So essentially, at its simplest, what a rejection block is simply this. This is the idea around it. What smart money is really interested in is the liquidity, the money that's at the bodies of the candles. That's where the real money is essentially at. It's not at the wicks, but the bodies of the candles. So these are very important reference points. So the moment you start to see the market draw all the way down there, close below this point over here, but reject that low, you start to see that it's formulated a low over here, and you start to see that the price is now breaking this down close candle. So that's our rejection block over there, right? So we see the market draw from the rejection block all the way into this fair value gap. We get a reaction lower, right? The reaction lower causes price to push into this order block over here, this bullish order block. So of course, depending on your rules, my rules are the moment I start to see price break but above that open price, immediately I can start looking at this as a bullish order block. Other people's rules may be, which is more confluence. If you start to see price trading above the high of the candle, immediately you start to see that as a bullish order block. So From this point, we see price retrace all the way into this bullish order block. Now, what is important for me is this point over here is the middle point of that bullish order block, which is termed as a mean threshold. So we can see that we rejected it. And the moment you start to see that, immediately you understand that this order block is strong, right? So we rejected that, and we can see, of course, we continued higher. So what's the draw after that? What's the draw in liquidity? Immediately you start to see that it's this high over here, because we come from internal range liquidity, multiple points of internal range liquidity. Therefore, we want to see price now reach into external range liquidity. But with that being said, let's go into the weekly time frame. Okay, cool. So on a weekly time frame, now we start to see more information, right? It's important to use these time frames cohesively, right? With these different ideas cohesively, as to give you a form of confluence, and you'll see what I mean by that. So we can see that this is that monthly point over there, right? This is now been established as a long-term low, right? Because you have an intermediate term low on this side and another intermediate term low on this side. So this is a long-term low. Hence, that's why the market rejected this point, right? But let's follow what the market is doing. We take the sell stops, we continue higher. Moment we start trading over there, we start to see that this is an indication that we now bullish, right? Now, look at this. From that point, we get a retracement all the way down into discount prices, right? And look at, this is what I mean by using different ideas cohesively in different time frames, right? We can see that we've pulled back into a deep discount point, being the discount fair value gap over there. We close right above the low of the fair value gap. Another form of confluence is that monthly rejection block, right? So the moment you establish this low, you start to trade above it. What happens, right? You start to see that this point is a low. It's a well-established low, and you want to see the market continue against that point. We'll look into it further on the daily time frame, right? So now we start to see the market continue higher as to reach from a discount price reaches premium prices, right? We're above the middle point, the equilibrium. We reach into premium prices. We reach into that fair value gap, and we see there's buy stops aligned over there. So what happens at that point? Smart money sells against these buy stops as to reach into an internal range of liquidity, being the order block over there, right? The weekly order block. So we see how the market draws all the way down there into the weekly order block. But notice how it doesn't go below that mean threshold, right? Another form of confluence that this point is going to be rejected. Another form of confluence that makes this order block very strong is right after this down close candle, all you had was up close candles. That's an inefficiency, right? That's considered as a liquidity void. We understand that the market is always trying to move according to, it's always trying to trade efficiently, right? So the moment you start to see inefficiencies in price, the market in future will fill those inefficiencies, right? So from this point, we start to see the market continue higher from a discount point, right? Discount point, we start to see new accumulation of orders here to push the market higher as to reach external range liquidity, right? Now, here's another important point of reference. We take these buy stops over here, which is external range. The anticipation is to reach into internal range. So we reach into the weekly fair value gap. But another point of reference, which is very important, is this point over here, which is considered as a mitigation block. What is a mitigation block? So in simple terms, like I said, when we reach this point over here, smart money sold, right? Smart money basically sold this candle, right? New selling was introduced against these buy stops as for 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 price to reach all the way down there into that weekly order block, right? So price was manipulated to continue lower. So they push price lower and as to reach the objective. Once they start moving price higher, the sell orders that they had initiated here are now in loss because, of course, we're above that point over there. So now what they do is they'll push price back here to this reference point and mitigate those sell orders. They'll close off those sell orders, right, and initiate new buying at that point. So this is considered, right, as a strong support, or it's considered essentially as institutional support zones, right? So The mitigation block is important. So now you start to see how price is respecting those points. You get wicks into the fair value gap, but price closes above the mitigation block. Hence, you see, new buying off of that point, right? Which continues the market higher. At this moment, we are in this weekly order block over here, right? So we may start to see price wanting to push lower, perhaps into this fair value gap, but we'll investigate that further, right? So let's go into the daily time frame. So on the daily time frame, like I said, the lower the time frame, you start to see more information, right? And you want to use this information with the higher time frames as well, right? And it should all it all of it should just give you one narrative, right? So the moment we pushed all the way down here, this was essentially just a daily break of structure. So the moment you start trading above that point, that's when the daily time frame switches bullish. So this whole pullback all the way down into discount prices was basically just a pullback for the market to continue higher to give you another break of structure over there because we are bullish, right? So like I said, of course, I've erased the mitigation block, all of those sorts of things, so that things are much clearer. So from this point over here, the weekly fair value gap, you see that price, gives you a market structure shift, indicating that the market is now bullish. Like I said, we established that point over there, intermediate term high. We do pull back into discount prices, right? This is where that weekly order block is. We see that there's alignment with a daily order block and alignment with daily sell stops, which are in discount prices. So new selling occurs over here in discount prices for smart money to target premium prices, right? So that's how you see the market continuing higher as to reach these buy stops, right? Now, here's another important point that I've referenced on the daily time frame. This is now considered as a breaker, which works exactly like the mitigation block. The only thing about the breaker is we start to see at this point the market switch bearish for a minute, the internal price action, and then you see a pullback. Off of this green candle, new selling was initiated at this point, right? Heavy selling, hence you see the market was manipulated lower. So selling orders were initiated here. So these selling orders caused a break of structure, a breaker. So the moment you see price come all the way back up there and breaks that point over there, and you pull back to that candle, that's your institutional support zone. They're going to mitigate the sell orders they had, and they're going to introduce new buying at this point. So new buying was introduced there for the market to reach into those buy stops, and then you see a pullback again into the weekly mitigation block as well as that weekly fair value gap. So new buying was initiated. So hence this extreme movement in price all the way to the upside. And of course, last week I did speak on how we'd want to see price push into this daily order block. And off of this daily order block, I did mention that we might see price wanting to come all the way down here into a mitigation block, right? Or we just see price come into a fair value gap, and that would be enough to push the market higher. So let's look into our smaller time frames to get an idea of whether we're still going to continue higher or maybe we might pull back, right? Okay, cool. So at the moment we are on the H4, and I did mention that this point was a very critical point on my video on Thursday, how we'd want to then see the market support this region or basically reject this daily order block, not the order block, but fair value gap, and how we'd want to see an established low for the market to continue higher. And I did give you all the evidence for that in the previous video, so please do watch that on how this was just uh, probably a false break of structure, basically a turtle soup condition that you just want to buy. So at the moment, I'm seeing prices respecting areas such as the fair value gaps, order blocks, right? And I'm just seeing price willing to continue higher. So let's go into our H1 time frame to see exactly what I'm speaking about. So that's our false break of structure. We see the market continue higher as to reach, there was a H4 order block over here that resulted in price wanting to pull back all the way into discount prices of this leg. Now we start to see the H1 gives you a market structure shift over there. We pull back into a H1 fair value gap, new buying. right? So notice how new buying is being initiated at this point. So new buying as for price as to reach these relatively equal highs. So at the moment, I'm seeing price wanting to reach these premium buy stops. And then possibly after that, you'd want to see price reach into those buy stops, those daily buy stops over there, right? So I'm currently bullish on the dollar, right? And if, of course, there's other information that's presented during the week, I will then release a video on that. But with that being said, let's go on to GBPUSD. Okay, cool, guys. So I won't be as in depth on GBPUSD. If you guys do want to, see, an in-depth analysis, please do watch the last video I did on Thursday, as well as the one I did on Monday, explaining all of these things, what's going on, and why price drew all the way up here. But in this particular video, all I'll be showing you guys is draws on liquidity and what type of condition we are within the market and how you should be trading, because this is a different condition. So I did mention last week, Monday, a very significant thing you could be looking at, which is grading swings, right? And I did mention that you want to grade, you know that the market is going to reach down here. That's our draw on liquidity. And to give you guys more reference, my long-term perspective draw on liquidity is these relatively equal lows. So eventually, I'd like to see the market reach all the way down there, right? So you want to grade your swings by 25%. So that's 25, 50, 75. You'll start to see that at these points, as you're grading your swings, like I mentioned, if you do want information on how you would have anticipated a reversal there, please do watch my previous videos. And grading swings, I did speak on about them last week, like I mentioned. You will want to see that these points, you'll start to see that these points are once broken, price essentially resists these points, right? Notice how here, you know, you break it, price resists that point, and you see heavy selling, right? So these points are very, high probability points where you want to see new selling within the market. So the moment you come down here, maybe you might see an order block exactly like this, or maybe in this instance, you get a pullback all the way into that order block. You want to initiate new selling off of that point. But one thing I want to talk about is seasons, right? Quarters within the year. The reason why this is important, you'll start to see that if you're going to look at January all the way into the 1st of April, I'm just going to do that roughly. It's very important to understand the different quarters of the year and how the market reacts in terms of quarters. This is an algorithm that's delivering price. The trading that occurred here is completely different from this trading over here. Here we were very accumulative, and we see the market continued high over there. And immediately when we start the new quarter, because this was the first 3 months of the year, immediately we start the new quarter, you start to see high volatility coming into the market. This is a different condition, very much different from this. So I say this to give you guys an idea of, the trading that occurred in here and the trading that's occurring here is completely different. Here, it was okay for you to look for prices to pull back all the way into your discount prices if you're looking for buys, right? Those 80, to 90% pullbacks within a leg. That made sense to look for in this condition. But within this condition, you'll hardly get that, right? In this condition, you're just going to get very small retracements and continuations lower. Me personally, I'm a day trader, right? Although I have all these large time frames, right? I only do that to give, to bring about specific draws that I'm looking forward to. But I trade on my M15, I enter on my 2 minute time frame, right? So please do pay attention that the trading here is going to be completely different from that, right? So for the next 3 months, what I'm seeing is the market continuing heavy to the downside, right, as to reach these points. And if it so happens that you get a pullback into that, then more confluence for you to just continue selling, right? So the condition we're in right now is this condition we had during, the last few quarters of last year, where you just saw heavy market movement, right? And this just signals that smart money is actively trading within the market. The algorithm is now in a sell program. That's why you're seeing all of this, because we have already taken all these buy stops and all of those sorts of things and heavy on the sells, right? But yeah, so come in every day. Don't expect those deep pullbacks. If you trading ICT 2022 model, just wait for your Asian high to get swept, maybe, and then you continue lower. So things like order blocks, all of those things, trade those, but anticipate a lower movement of price. But with that being said, kind regards, the architect.